Thank you, Mr. Chairman and Ranking Member Chair Yellen. A couple of years ago at the Humphrey-Hawkins hearing, I asked you, when does America get a raise? I asserted America deserves a raise, fueled in part on my behalf because we'd been through 30 years of fairly stagnant wage growth with the exception of some warmth, as it were, in the late 90s. I respect you because of your prowess as an economist. I admire you because of what I perceive to be your commitment to some values, including a concern for how the Fed's policies actually impact Americans, and that includes in this area of wage growth. I believed it 2 years ago, I believe it now. 2.5% nominal growth, while better than a few years ago, does not render Americans feeling as though they're getting ahead, let alone staying even. So, given your commitment, or my perception of your commitment to the average American, if such a thing exists, I read with great interest in the Monetary Policy Report, the table on page 42, which essentially indicates that you project a definition of full employment over the long term of between 4.5 and 4.8%. If you get monetary policy right, 4.5 to 4.8%, and yet an indication that 2 years hence, the unemployment rate will be 3.8 to 4.5%. Little hard for me to read that as other than you're trying to or willing to let the economy run a little warm, presumably because maybe we can get wage growth above 2.5% and maybe closer to historic recovery rates of 4.0%.
Well, inflation is running over the last 12 months at 1.4%, below our 2% objective, and we've had 5 years or more of inflation running under our 2% objective. That's a commitment that we have, and it's a symmetric objective. And I think allowing the labor market, allowing unemployment to decline to the kinds of levels that you cited looks to be consistent with achieving our inflation objective.
And would yield higher wage growth than 2.5% you would expect?
Well, I think wage growth seems somewhat low given our 2% objective, but it is very important to remember that one of the things that's holding down wage growth in real terms is very low productivity growth. I don't
want to go down that rabbit hole. We did that last time.
I mean, that, without that changing, that really limits the long-run prospects for workers.
I get that, and I get the controversy surrounding our measure of productivity of late. The fact remains, America needs a pay raise. I take a fairly straightforward view of this. It seems to me that the economy. If we fall into a recession, the Fed cuts interest rates, and that increases availability and demand for loans, for the purchase of homes, for the purchase of automobiles, which has a stimulative effect on the economy. It didn't happen this time with respect to housing necessarily. It didn't respond. It did in autos, in fact, fairly robustly, until recently. And now auto sales are going down. There are layoffs literally in the industry. You have described the monetary policy approach you're taking as still accommodative or stimulative, but that's not occurring in autos, especially given what I said earlier about I genuinely believe you care about how average Americans are impacted. Homes and autos are the two biggest purchases that most Americans ever make. It didn't work at all through the recession in homes. We're stuck back at 1994 construction levels, and it's now not working on autos. Are you concerned?
So mortgage rates are a little bit off their lows, although they're down from last year. Look, I think you have to look at the bottom line, which is this year we've had 180,000 jobs created a month, only slightly lower than last year. 190,000 or so. The unemployment rate continues to decline. The labor market continues to strengthen. And that means that even if auto sales are off their highs, that we have strong enough demand through consumer spending, a recovering global economy, a pickup in spending on plant and equipment, that it is supporting continued job creation at rates greater than the labor force growth.
Thank you.
Time of the gentleman has expired. The chair now recognizes the gentleman from